Okay, welcome to Orderflows Trading, and today I'm going to talk about ratios and how to use them in your order flow analysis. My name is Michael Valtos. I'm the founder of Orderflows.com. First, I get through a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. CFTC Rules 4.41 state hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Alrighty, so this is the E-mini 10 range chart for Tuesday, May 5th. I'm sorry, Tuesday, April 5th. And what I'm going to talk about today are ratios. And what are ratios? Well, it's different types of ratios. I get into it, in my trading course. I discuss it in the trading manual. But basically, I use ratios as a way to measure the activity at the edges of bars. Like telling you if drying is buying up, or if there's big bids or offers in the market. Numbers that traded. People often talk about, dome, trading with the dome. That's real order flow. Well, yes, that is. When you look at a footprint chart, it's actual trades that happened. It shows the commitment people make to the markets as opposed to just entering in orders. And if they get filled, then they have a commitment. That's when you're entering orders. That's your intention. When you actually trade, you have a commitment. There's nothing wrong with dome trading. If you like to trade using a dome, go for it. I prefer to use a footprint chart just because I want to know how the market reacted to prices. People tend to think that all prices are the same. They're not. You get to certain price levels in the market, and each price level has its own unique features. So, if you get into a price level and liquidity is drying up, that's important. So one of the features of the Orderflows Trader software, and it's the software that I developed based on my way of trading. I've traded for over 20 years at some of the biggest trading firms in the world. When I talk about trading firms, I mean names that JP Morgan, Commerzbank, Cargill. These are real firms. It's not like, I just traded for myself. I was trading real money in the sense, real money, but in the sense that it's backed by assets as opposed to just piking it out, speculating here and there. When I developed the Orderflows Trader software, it takes the footprint chart to another level. There's a lot of features that are not on other footprint charts. I like the footprint chart. I could use a basic footprint chart for myself, but a lot of people, that I've tried to teach order flow to, sometimes that you need, something on your chart saying, "Hey, idiot, don't miss this. Don't miss this level. It's important." So, that's why you're seeing, blue numbers, arrows, things like that, just to sort of, slap you upside the head and say, "Hey, don't miss this." So let me just talk about this real quick. This is yesterday. Tuesday, which is yesterday, and some E-mini charts. So we came into the low. We made a new low. We got a divergence. You got a positive delta and a new low. So usually when you're getting a positive delta, you should be having positive deltas as you're moving higher, not as you're making a new low. What it's telling you is that price action in the bar has changed. It went from the sellers being in control to the buyers being in control. I'm not going to get into divergence too much right now, but what you have is basically, when you have a divergence, you have price acting different to your indicator. In this sense, delta is your indicator, and you have a positive delta at a new low. That's what your divergence is. Order flows takes it a little, a step further with, I want to see the price action in the candle itself. I want the candle to be green. I just don't want to have a divergence on a low when the candle closes on its low and it's a red candle. I just add that extra filter in there. And, so what's the market telling you here? Here you got a ratio. It's telling you, the selling dried up down at the bottom of this bar. It's got a ratio of 39.41. I have different types of ratios. There's not different types. There's two types. There's ratio bounds high or ratio bounds low. So ratio bounds high, if it's a number above 30. Again, I explain it, in the software, when you get the software package, I explain it on its importance in, why it's there. So it's not like, oh, you just have this number, okay, it's above 30, you got to buy. No, I mean, you have to take everything in context of the market. But, I explain it. How often do you buy software indicators and you get it and you don't understand it? It's not your fault. It's the fault of the creator. Maybe they don't want to tell you for whatever reason. You're forking over your money. You should know this. These people should be transparent to you. So anyway, but I get into that. I'm not gonna get into it in this call, but I'll get into that. I get into it in the training course, in the manuals, and even if you have any questions, just message me. So anyway, so you got two things here. You got a ratio, and you have a divergence. Which is what you want to be seeing. Taking divergences by themselves is dangerous. You'll go broke. I mean, it's nice to look on a chart after the fact, after the trading day, and you see divergences right on the low and divergence right on the high, and you say, oh, I should just buy that. But on a market that's trending in one direction, you're going to get a lot of divergences on the way up if the market's trending higher. And, it's going to get a divergence, come off, go back up, make a new high, get another divergence, come off, go back up, make a new high. So you're going to get a couple divergences, that don't work out. So, if there's any way you can, filter out a trade to, give you more accuracy, then, that's what you want to strive for. And, ratios, help in that respect. I mean, ratios by themselves are good, but, what I'm talking about in this example is you have the low, you have the divergence, and you have the ratio. The market's going up, okay? So we're finally starting to rally. You see it in the next bar. This is a 10 range chart. So, 852, this bar finished. We turned up. It was all systems go. You got the divergence, you have the ratio, and, we settled up. The next bar, again, it's now the market is doing what you want to do. You have this a stacked buying imbalance, 1, 2, 3, 4 levels deep. Again, I discuss what buying imbalances are. If you have any questions, just email me or go to my website. I talk about a lot of these things there. But this is the perfect the perfect setup almost. I mean, all setups don't look exactly alike. The numbers are different, but this is what you want to see. You want to see a divergence and a ratio in the same bar, and and then the market's going up. So it's giving you a chance to get in anywhere between 39 and 40. And it traded all the way up to 46. Actually, traded all the way up to 48. So there's a nice move. In the middle of the move, you're getting this stacked buying imbalance, which again is giving you, confirmation that you need to be, that you should be long already. To be getting in off this buying imbalance, I think is late. Order flow is telling you to get long in this bar, or not in this bar, but this bar in the order flow is telling you to get long somewhere in this next bar. And you have plenty of opportunity to get in. There's plenty of volume traded, 5,000, 3,000, 1,300. Even if you're just lifting the offer here, sitting on the bid here, you're definitely going to get some before the market, rallies 6, 7 points. These are points. When you're trading on a dome, do you get points? I've traded on a dome, since dome started. I used to trade on the CME floor, and I went upstairs to the trading desk. On the old Globex terminals. Then on Globex 2 came out in 96 or something on GL, and that was really the first time you had a dome that you could use to trade. But, I mean, when you're trading dome, you're really trying to scalp. You're trying to say that's the best way to say it. You're trying to scalp, right? You're not necessarily trading for ticks. You're scalping for 3 to 5 ticks rather than 3 to 5 points. What would you rather have, 3 to 5 ticks or 3 to 5 points? I'd rather have 3 to 5 points. I don't, I'm older now. I'm in my 40s. I'm not in my 20s where I could sit in front of a dome for a few hours straight and not get a headache. Now, you came up into this stacked buying imbalance, and now you have a new support level. And what happens? The market, bing, bing, goes down, goes up, comes back down to it, goes back up, comes back down. It's holding as your support level. I'm not looking for this to hold as my support level the entire day or anything like that. My software, I have it where you can draw out your zone however long. I like to have it 5 bars out, and for me, I find it, it can hold for the short term, not, so I'm not looking at it to be a level for the entire trading day, just for the short term. And you see it holding pretty good here. So, if you're long, based on this bar, if you're long in this bar, you get, you have this stagnant buying imbalance. Again, it's confirming you, hey, that's right. You could probably look at this level here, this, 42 to 43 level as your support for being in the trade. So, you're getting in at 39, somewhere in there. At the very least, you should be looking to get out above 43. So, that's already 4 points for you. Whether then you can manage it from anywhere inside, above this level. Later the market, eventually sort of came off. But it was a day that was trading sideways for the most part. But just real quick, I mean, that was like the best trade of the day. Then just, real quick, we did come off a little bit later, towards the close. This is my new Delta scalper thing, which is telling you to get short, somewhere in this, in this bar or even in the next bar. But, this is a nice trade, getting short at 42, all the way down to, below 40, down to, the 30s. Again, you have a divergence down here. But you don't have a ratio. The market did go up, but I mean, it's dangerous. Buying divergences every time you have a buy divergence. I'd prefer to get some sort of signal to confirm it. Again, this was another divergence. I said if you're trading divergences, I think today was probably a great day. This one market went up, here it went up. And here it went up, but for me, I like to get a little bit extra out of the trade, or sorry, a little bit extra filter into the trade. I mean, if you're trading divergences, you're gonna have stops, a couple points below your entry, but I just find on a market that's quiet, it's been fairly quiet week, but if a market that's trending in one direction all day long, buying or selling divergences can be the death of you. So, I like to use the ratios just to, to give me a reason beyond the divergence. In this case, it's the ratio bounds high, which is telling me that the, the selling interest at the bottom of this bar, if it's below, it's going to be a bullish signal. If it's above, it's going to be a bear signal. These are different types of ratios. These are ratio bounds low. I'll get to that in a different segment. But when you have a ratio bounds high, it's telling you that price is being rejected below those levels. Just as you see here, this a ratio here, a ratio here. We did sort of come up, towards this high, and then come off. I prefer to take ratios, and you gotta take everything you gotta take in context of the market. So, in this case, you have a ratio here, but it's in the middle of this range. So, I wouldn't look at it as powerful as it had happened up here. Unfortunately, there wasn't any ratios right up near the highs of any moves. And Yeah, even there, no. But like when I see it at the bottom of the day, in the low of the day, or the lows of moves like you see here, then you pop up, 3 or 4 ticks. That's where I like to see it. Again, I explain this more in depth in the trading course, and even in the trading manuals, and even the room I'm off this week, but in the trading room, when I see these things, I explain them to you so that you can understand it much better. I mean, when you buy the software, I hate to say you buy access to me, but once you start using the software, you have questions, and I'm there to answer them for you. So, um, you know, don't be afraid to ask me questions. I said I'm a small operation. I'm not a big operation where I had 20 people working for me, but I'll get to your question eventually, hopefully, and and answer it. Because I want the users of our software to learn how to read the order flow and learn how to trade based on the software and how they can learn to interpret the order flow. That's why I created the course. That's why I created the software. So thanks for watching this video. To learn more about trading with order flow and the software I used in this video, be sure to visit my website, www.orderflows.com. My email is right up here. If you got any questions, shoot me an email. It's mike@orderflows.com. I got a Facebook page. I'm on LinkedIn. I even got, obviously I got on YouTube. But just if you have any concerns or questions, just let me know. I'm there to help you.